to our CIELO workshop series, this month's edition. So again, very excited to have you all here. Very excited for today's topic. Before we get into today's topic, I want to do a quick introduction to us, CIELO, for those of you who are not familiar with who we are and what we do. And again, this is a reminder, this workshop today is co-hosted by not only CIELO, but also our colleagues, our friends at Small Business Majority. So a quick introduction as to who we are and what we do. We are CIELO, stands for the Community for Innovation, Entrepreneurship, Leadership, and Opportunities. We officially launched in 2015, but we've been helping clients since 2012. We are a nonprofit organization helping aspiring entrepreneurs become business owners. We help you build and develop the entrepreneurial mindset needed to help you achieve success. We provide the resources and guidance, and you provide the hard work and passion. One nice thing about what we do here at CIELO, being that we are a nonprofit, all of our services, all of our programming is at no charge to our clients. So in terms of what services do we offer here at CIELO, we do have a small business development training, which is a 6-week training program for those of you who may be looking to start a business. We do have a training program on that we do run on a regular basis. We also do a monthly workshop series, just like this one, where we have subject matter experts talk about different subjects associated with entrepreneurship. We always do it the last Wednesday of each month. We also offer one-on-one small business coaching. If a client or if any entrepreneurs are looking for a little bit more guidance, we do offer that as well too. We're currently piloting a microgrant program for CIELO clients who have participated in our CIELO Small Business Startup Program. So that is something that we're piloting right now. And we also try to be a resource. We try to connect all of our clients to the appropriate resources when it comes to looking for help for starting or developing their small business. In terms of upcoming events, we do have our next session of the CIELO Small Business Startup Program starting on July 19th, 2022 at 4 p.m. Just a quick summary, take a journey on the entrepreneur roadmap to business launch. This is a 6-week training program for entrepreneurs and startups. It includes a live classroom training for 3 weeks and one-on-one business coaching as well too. Topics include how to pick a business name.
That was October. I had finished my Common App essay, and then I started.
Mute everybody real quick here. Topics include how to pick a business name, advertising on social media, introduction to business financials, and much, much more. If you're interested in learning more about this or registering, you can click on this QR code here on the flyer, and maybe Gabby, if you're able to drop the registration link in the chat. And also feel free to email us at info@cielocommunity.org if you are interested. And as a reminder, this program is at no charge. So today's topic is financial readiness, what entrepreneurs need to know. This is a very exciting topic, one that I'm very excited to have our panel here with us. So we do have 3 well-informed reps from Accessory. We got Melba Baquero. From Lendistry, we got Kent Monfort. And from Comerica, we have Jennifer Eltinge. And before we get into this, I'd like to pass the mic on to our friend and our partner, Jocelyn from Small Business Majority.
Thank you so much, Alex. Good afternoon, everybody, and thank you for joining us today. As Alex said, my name is Jocelyn Cuesta. I'm with Small Business Majority. We're a national nonprofit that focuses on education and advocacy. All our work is organized around 2 fundamental beliefs. One is that we believe entrepreneurs are essential building blocks to a healthy, sustainable, thriving local community and economy. And therefore, as entrepreneurs, you deserve all the tools that you need to be successful. We do a ton of educational outreach programming, such as this one here, with chambers, business groups, and partnerships like CIELO to make sure that resources get into the hands of small business owners. Our second fundamental belief is that there's an authentic voice of small business that exists in public policy, and it's vastly underrepresented. And so we seek to bring the voices to stakeholders in DC and state capitals across the country. We do that through scientific opinion polling to really get the perspective of what small business owners think about policy. It can often be different than what the loud a small business owner's voice, it can often be different than what the loud, large business voices are advocating for. And so from there, I will pass it on to our panel so that they can introduce themselves and share with you how their organization helps small business owners. We'll start with Kent.
Thank you, Jocelyn, and thank you, Alex. Good afternoon, everybody. I am Kent Monfort. I am a business development manager at Lindustry, and I work with a team of representatives who basically reach out to borrowers across the country all day long and assist them in getting into SBA loans, or more specifically SBA 7A loans, which is what we offer nationwide. Lindustry started in 2015, and one of our main missions was to target minority-owned small businesses across the country and their underserved communities. But we have grown considerably over the last few years. Really, the last 2 years has been exponential. And that growth was due in part to what I would call kind of a non-traditional business model, but also our technology, our IT infrastructure. We have sunk a huge investment into our technology and also specific programs that help us move large volumes of applications through our system. And I think that it's this technology that makes us stand out amongst many of the lenders that are out there, and our ability to process so many at one time. Needless to say, we've scaled the business dramatically over the last couple of years, let's say over the COVID period. We believe that this technology, essentially it enhances the borrower's experience. It obviously makes us more efficient, and we're able to more quickly deploy capital into our target markets. And so what do I mean by that? Deploying capital, just in the last couple of years, Lindustry has deployed, or if you look at both loans and grants being associated with COVID relief, but if you look at the total volume that we've deployed, it's approximately $8.7 billion. And along the way, we've worked with a little over 586,000 small businesses. So needless to say, it's been an incredible trend, and we continue to grow to this day. That's who we are. We eagerly like to serve the small business client. I'm glad to be here, and I look forward to your questions.
Thank you so much, Kent, and thank you for all the work that your organization and yourself do for small business owners throughout California and throughout the US. I'll turn it over now to Jennifer. You're muted, Jennifer.
Okay, so basically I told you everything you need to know. No, I'm just kidding. Yes, Jennifer Eltinge from Comerica Bank. I've been with Comerica since 1994, so just about 28 years, which is unique in my industry. I cover Southern California, Arizona, and Colorado. Comerica is about 172 years in existence. We're headquartered in Dallas, Texas, and our assets are almost $90 billion. My role at Comerica is helping small businesses and mid-sized businesses obtain SBA loans, primarily 7A, 504. We do USDA loans as well. Comerica is unique in the sense that we are truly a business bank. So unlike some of the other banks that are more consumer oriented, we are one of the top banks that focuses on business. So in that way, I think that makes us uniquely suited to help business owners at every level. And I look forward to hearing from you as far as what questions you have, and I will definitely try to help businesses any way that I can. What makes me unique also is right after college, I actually got an SBA loan. which was very challenging. And we can go into some of that if you want us to, but yeah, it's a challenging process in the sense that, I didn't have a successful track record. It was a startup franchise. And then we expanded to getting another franchise, which again was easier, but it was still a challenge. So more about that if anyone is interested.
Thank you so much, Jennifer. And I really appreciate all the work that Comerica, for those that don't know, Comerica is very involved in the community. You can find them everywhere throughout Southern California, attending all sorts of events and putting on events too to also educate small business owners. Now I'm going to turn it over to Melba. You're muted, Melba.
Let's see. Okay, let's try that again. This is Mel with Accessity. Just wanted to say hi to everybody and let you know a little bit about what we do. Accessity has been around for close to 30 years. Formerly, we were known as Accion San Diego. Changed our name last year and rolled out a couple of new programs. We specialize in startup companies, loans for startup. Traditionally, where banks won't lend because you either don't have the time in business or you're not making the gross income you need to be making. Those are our target market. That's what we're looking for. Our loans do go up to 100,000. We do have multiple loan programs, and what we try to do is we try to tailor a program. Find a product that fits the business that's applying. We try to get out as much as we can into the public to let people know that we're out there. We're also a resource. If we are unable to help the client, we are a resource to other CDFIs. We want to help them if we can't get the funding at someplace else. We also like to offer other community services, credit, credit counseling. Maybe if you need help with just where to go, where to start. If you have, basically an idea in your head and you want to, make it come to life. We have access to counselors that work with other community partners that can help you. And then we work in tandem with these community partners to try to get the business owner ready for funding. I'm happy to be here. I'd be happy to answer any questions you might have. As far as myself, I've been with the company since 2020. Really came onto the company as a business development officer and went straight into the pandemic and working remote. So it's been very interesting. And we've learned to pivot with the times. And so we are, at this point, it's completely online applications. You don't have to go anywhere. So it's very convenient. We can show the business owners how to get around as far as the application and what needs to be done. So, very helpful in that respect. But if anybody has any questions later on in the presentation, let me know. I'd be happy to answer anything I can. Thank you.
Thank you so much, Melba. I've actually referred small business owners to Melba, and they all have wonderful things to say. She stays with them from the moment she's connected to them and until they've reached their goal. So Accessity has been a really great partner. Alrighty, so we have about 7 questions that are pre-assigned to each speaker that they'll answer. Once we've completed those pre-assigned questions, we will open it up to the floor, and you can ask the 3 individuals any question that you want in regards to lending, banking, and credit. Any question that you have. There is no dumb question. They're all good questions, and so we'll make sure to give plenty of time to open up the floor so that you can pick their brains. With that said, we'll start with Kent. Kent, what documentation, cash flow statement, or projections should a new business have prepared?
Yes, thank you, Jocelyn. So the documentation that's required, frankly, whether you're brand new or have been in existence for a while, is pretty much set in place, and the guidelines we follow are the SBA's guidelines. And so it wouldn't really matter which lender you were speaking to. They're going to all want to follow the same guidelines and require the same documents be sent to them. Typically, if a business has been around for any length of time, we would require 3 years of business tax returns, 3 years of personal tax returns. We're starting July here soon, and so we would also want to see an interim statement, something that gets us kind of close to where we are in the year now, in 2022. They'd also want to see what's called a business debt schedule that would simply list any of the obligations the business already has, who the creditor is, the outstanding balance, interest rate, monthly payment, that sort of thing. Even if you had no business debt, believe it or not, the SBA still wants that document, and you simply would write a 0 in there and sign it, you'd be good to go. In addition to that, they'd like to see a personal financial statement on any owner that has 20% or more share in the business. And then finally, 3 months, the most recent 3 months of business bank statements. Those documents comprise pretty much everything that's needed for a business that's been around for any length of time at all. Now, let me switch gears a little bit because as Jocelyn mentioned, many of you might be starting something brand new. And in that case, there'll be other documents that will be asked of you. Obviously, you can't provide a business tax return if you don't have a full year yet, or maybe you only have 1 year, you don't have 3. It's kind of whatever you have, they would want to see it. But to the extent you don't have historical information, a lender would want to collect things like a 2-year projection, typically a profit and loss month to month, 2-year projection on what you see this business doing, with an emphasis on being as realistic as you can be. Because sometimes, I don't know, you really see great things happening. I've seen some P&Ls where it just goes like straight up in the 2nd year, and that may actually happen. But it also tends to be more often than not that, no, it doesn't quite hit that high goal. And so I think it carries a little more weight with the folks in credit when they see something that isn't just off the chart, but something that, okay, I could see this trend working this way based on what they're suggesting. In addition to the projections, they want to see a business plan. They'd want to see kind of what you had in mind and how you're going to get to where you're saying you're going to get to. And then after that, kind of owner resumes or bio. They want to see, for everyone who's a 20% or more shareholder of the business, they want some background on you. And ideally, they'd love to see that you have some experience in this industry that you're setting off into with the new business. And that certainly helps in terms of defining what I would call the character of the borrower, kind of the background that you have. So that's, without getting kind of too much more into it, if you have specific needs, I know Jennifer was speaking about franchises, and maybe you have needs for business acquisition or something along those lines, why there might be additional documents. But typically what happens is you'll submit the minimum required documents up front. They'll be processed through the system, and then someone will follow up with you shortly after to say, aha, based on what you're telling us, we'd like to see this, or we'd like to see this extra document. And that's how they move the package, the entire package, into credit for final due diligence. That's it. That's all I have for you.
Thank you so much, Kent. That was the perfect response and really well thought out and thorough. To reiterate what Kent said is, have your documentation in order before you approach lenders. All the requirements are basically the same across the board. Thank you so much, Kent. Next, we'll have Melba. Melba, what is a personal credit score? What is a personal credit score relevant to small business success? And what defines a good credit score? And how can you maintain or build credit?
Okay, thank you, Jocelyn. Okay, so personal credit is very important. There is a bit of a misconception when it comes to personal credit versus business credit. generally speaking, when we look at personal credit, that is a pretty accurate snapshot of how you're going to handle your business credit. If in your personal credit, you opened up credit cards, you took out car loans or equipment loans, and you didn't pay on those and they ended up going to collections or becoming liens or charge-offs, that is a pretty solid indication that you're probably not going to take care of business credit, mainly because quote unquote business credit isn't really going to affect your personal credit score, right? So you figure, okay, I'll go and take out credit under my business. If I don't pay it, I won't worry about it because it's really not going to affect my personal credit. But unfortunately, especially for us, Accessity, that couldn't be further from the truth. Accessity offers commercial loans with a personal guarantee, which means that yes, we're going to look at your business. We're going to look at your business plan. We're going to look at your credit. Specifically, if you are a startup, you have no business credit. So the only thing we can look at is your personal credit. So when we look at your personal credit and you're 30 days late on a mortgage payment, or late on your car payment, what are the odds that you're going to make a business loan payment on time? It's probably not going to happen. And I think, again, one of the biggest misconceptions when people apply is, well, I don't have good personal credit, but anyhow, they're going to base it off my business. Well, chances are your business might not even have any credit established. So it's imperative that you take care of your personal credit because it is a direct reflection of your spending habits and how you're going to pay your bills off. As far as what you can do for credit, like to build credit, there's a myriad of things you can do. One of the things is always to keep balances under 30%. Don't max out your credit cards. What we find a lot of times is that by the time the client gets to us, and this is a huge no-no, and I know people think, well, I wasn't going to be able to get the money anywhere else, but they end up maxing out their personal credit cards to get their business off the ground. That's the worst thing you can do, because what happens is you're using your own personal credit, and when we pull credit, it shows that you're overextended in debt, which means that your chances of getting approved for additional credit when you're already overextended over here, they plummet. So you don't want to get to the point where you used all of your credit cards, probably at insane rates, interest rates, and come and say, I want to try to get a loan. So that leads us back to planning. What you want to do, the steps you want to take when you decide, okay, I want to open up a business. Make sure that you have all your ducks in a row. And the first duck in that line should be your credit. So other than keeping your balances below 30%, you want to have different types of credit open, maybe a mortgage payment, a car payment, a couple of installment loans, stuff like that. The thing with Accessity is if you do get a loan with us, it does reflect on your personal credit, but you are able to add that trade line onto a commercial reporting agency, like Dun & Bradstreet, let's say. You have it added. So, you don't want to open up this trade line and then not make payments on it, because now you destroyed your personal credit a little bit more and you're starting off on the wrong foot with commercial credit. So I always say, try not to live above your means. Make sure that, you're leveraging your credit, because that's what credit is supposed to do. It's not so you can max it out. You're supposed to leverage your credit so you can get more credit when in terms of business loans, so that you can grow and extend. I can go on and on about the credit, but I think that is the main point I would like to get across, especially if you're thinking about opening a brand new business and you're trying to figure out, okay, what do I need to do? What are my first steps? Always make sure that your credit is in line before you apply for business loan. Just keep in mind that anytime, especially with us, with Accessity, we are going to pull your credit. It's going to be a hard pull. Generally, most people know what's going on with their credit. They know if it's good, they know if it's not good, if they have issues. So just keep in mind that CDFIs like Accessity and some of the other ones are going to do a personal credit pull. And we are going to glean information from that to paint a picture about you as a person, you as a borrower, and what we can expect to see as you as a business owner. So that's what I would say about that topic.
Thank you so much, Melba. So the next question is for all three of you. We can start with Jennifer first. When applying for a loan, what do lenders typically focus on, and how can a business owner make their business lender ready?
So as far as what we focus on, it's kind of a multi-pronged approach. We're going to look at, of course, your business plan or the business that you are either in or are trying to acquire. And in that sense, we're going to look at cash flow, the collateral, as Melba said, the credit, personal credit of the guarantors, as well as credit for the business. We're going to pull a background check on all guarantors, the business and affiliates. So we're going to know, have just a broad picture of everyone or every entity that is involved in the business. So yeah, we look at all of it. Underwriting is mainly science, but somewhat an art form as well, because it is looking at all variables at one time. And we are looking at the business, going 3 years back, as Kemp said, but we also are looking most closely at probably the last couple years, and especially in the age of COVID, we've had to make some adjustments in underwriting with respect to, if your business was shut down during that period, of course, it's going to not depict how the business was actually running. So we might go back to 2018 and 19 and also look at how you've hopefully bounced back, in the current year, in 2022. So having all of that information available to you, it should be something that you update constantly if you're looking for financing, but that you have a sense of where your business is going. So we give credit, or I should say we give consideration to the last 2 years or the next 2 years of your business. We look at your projections and the assumptions to those projections.
Thank you, Jennifer. Melba, the same question for you. When applying for a loan, what do lenders typically focus on, and how can a business owner make their business lender ready?
Okay, so like I mentioned before, one of the main things is always going to be your credit. Aside from that, I think a business plan is imperative. You have to know where you're going and how you're going to get there. It's very easy to see other people open a business and succeed, and someone else come and say, "Oh, I could replicate that." But you have to take into account all the what ifs that could happen. Are you prepared if the pandemic comes again and he ends up shutting down? Are you prepared financially to deal with that scenario? What's your plan B? Do you have any other income coming in from any other sources? So I believe right up there with your credit, I think a solid business plan is key. It's key to helping you, to get from point A to point B. Why? Because it forces you to think about those what if situations. Put it on paper. Sometimes in your mind, you're thinking, okay, I'm gonna open this business and, I anticipate that I'm gonna make $5,000, the first month, and 10,000 the next month, and 15,000 the following month. That might happen, but it might not happen. And so if it doesn't happen, what do you have lined up, on for these what if situations? What are you going to do to help you get past that hump? Now, as far as accessity, all of our loans are fully underwritten. And so as a BDO, as a business development officer, when I have clients, my job is to talk to the client and kind of help them, decipher what it is that they're trying to do with the business. I want them to succeed. But if they come to me and I ask them, how do you plan on overcoming this? And they don't know, what is the underwriter going to think when they look at that and they, the financials that they're putting together, the projections are really not based in reality. So that, that action of having to put together a business plan forces the business owner to have to really think through what they need to do, and how they're going to do it. How are they going to put this business together? We're there to help, but we can only do so much. So I think it's great. There's a lot of entrepreneurs coming out of the woodwork right now. I mean, we absolutely love it because, the pandemic forced people to have to think outside of the box, and we're here for it. But it takes a lot more than just saying, I want to do this. It takes a little bit of planning and a lot of hard work, and then a little bit more planning after that hard work. So I think that's the advice that I would give, and I think those are the points that prospective business owners should take into consideration.
Thank you so much, Melba. The same question for you, Kent. When applying for a loan, what do lenders typically focus on? And how can a business owner make their business lender ready?
Well, yes. First of all, Jennifer and Mel, you pretty much nailed it. And thankfully that when we're talking about what a bank likes to see or a lender likes to see, there are so many variables involved that I can add on a little bit of extra stuff, but I thought you all covered it fairly well. Jennifer mentioned the art and the science of a deal. And I think that's really important because they're truly two different things. And a bank wants to understand your business, wants to see what you're projecting, and wants to really understand you, the individual, the borrower, kind of what you're about, your history, and how you're going to make it happen with this business. That's all really important. And it kind of falls more on the art side of things. They're trying to be as creative as you are with how are we going to make this loan happen. But the flip side of that is the science of the deal. And lenders are often faced with a situation where the actual numbers don't suggest that we can do, X amount. The numbers suggest maybe we can do a different amount. Regardless of your story and how wonderful it is and how the lender feels about it, at some point along the way, the numbers come into play. And I'm thinking in terms of SBA loans where they really do have certain minimum requirements for cash flow. And I see a lot of applicants where they are so close, you can see they're trending, they're just not quite there yet. Maybe they need 3 more months or 6 or 12 more months, but you can see them getting there. They're just not quite where it needs to be for the SBA to okay the loan. And it's nothing personal. It's a guideline that all lenders have to follow. But I'll throw out a couple of numbers for everyone to be thinking about. When you're looking at the free cash flow of your business, after all expenses are paid, how much extra would you have left over? The SBA would like to see that for every dollar, let's say, of monthly debt payment, or you can annualize an annual payment if you want, for every dollar of debt payment, they want you to have $1.15 of cash flow. So if we were to crunch all the numbers and we understood the story and we had all the projections, but the numbers looked like, it wasn't 1.15 or $1.15, it was like 90 cents. As much as we love the story, we'd have to tell you, let's talk again in 6 months. Let's update your financials after you've had a little more time to continue this trend, because it's only with some level of certainty that we're able to submit a deal and know that it will be signed off on, not only by our credit folks, but also by the SBA. So that's one thing to be thinking about. I think that's important. Collateral comes into play, obviously. A lender likes to look at, do you have any business assets now? Because to the extent they need, collateral to support a transaction, they're going to look at what business assets you have. And the SBA is kind of famous for, okay, you have no business assets. So let's just say that in a liquidation value basis, your assets maybe aren't worth the amount of the loan. Well, then they switch gears and they'll look to see if you own a residence, or if you have rental property, or maybe a commercial building. Actually, they probably look at that first, but they're going to look for somewhere else where they can put a second or a third lien on that property in order to have collateral that supports the loan. So those are some numbers and some science behind what an underwriter is going to be thinking about when they look at your loan application. And the other thing that popped into my head, which it's been around forever, and so many of you may have heard this, but there's a concept in lending called the 5 C's of credit, or the 5 C's of lending. And essentially what it amounts to is there are 5 words, they all begin with the letter C, and a lender will be thinking about all 5 of those things as they review your application. They may not actually say, we look at the 5 C's of credit to make our decision, but it's the concept of the 5 C's of credit that kind of guide them. And so just to quickly throw those at you, the first one I mentioned earlier about character, and really that, that just means kind of who our owners are, what their background is, what their FICO is, how, is there anything derogatory on the FICO? What's their minimum score? Things like that. How do the background reports look that they've pulled on the owners? Capacity comes into play, and capacity is speaking to, exactly how much loan can they afford to pay? Because the worst thing for someone in credit to do, there's really no upside in it for them. They're going to sign off and approve a loan, and if it goes out and 30 days later, you're late on the payment or don't have the cash that's necessary, someone's made a mistake along the way. So they're evaluating your capacity to pay given the size of the loan. They want to look at the collateral, as I mentioned earlier. They want to see if you're, for instance, needing a down payment. Let's look at your capital. What's available for a down payment, or another term might be liquidity, but only C's are allowed for this. So the final one is conditions. And with conditions, they're really referring to, what is the term of the loan that makes most sense? What's the interest rate they're going to pay, and how does that affect their overall cash flow, their ability to service the debt? Is there going to be a balloon payment in this loan? And so we really only have to get maybe 10 years down the path before we have to deal with a balloon payment. Those are the conditions of the loan that a lender or an underwriter is thinking about as they review your application. So I guarantee there's more than what the 3 of us have brought up so far, but that's what I have to add to the group.
Thank you so much, Ken. And I just have to say, wow, wow, wow. All 3 of you have been so insightful and really going in depth and thinking through these questions and making sure that you're hitting all the points. And so I don't know about everybody else that's listening in, but I really appreciate the way that you guys are responding. So the next question is for Jennifer. What are the most common obstacles to lending that you encounter?
Yeah. Want to make sure I'm muted. The most common one I would say is kind of a lack of preparedness when you're talking to a lender, because you're forming hopefully a relationship with whoever you are talking to, whether it be a banker or an advisor. So you want to make sure that you have all the tools necessary to establish that relationship. So that's that comes back to what we've already discussed in terms of having your financial package together, having your projections together. You also want to have your team, you want to work with people who want to work with you. So that's very critical. Having for example, when you have a business account at whatever bank you do, you want to make sure that you get to know someone at that bank, whether it's a relationship manager, the branch manager, someone who's going to acknowledge that relationship and want to work on it. So it's very important to do that with your CPA, with your attorney, all the people that are part of your team. Get that relationship, and a lot of times it has to come from you because you're one of many, and so you need to really establish that and be clear about your goals, your where you are currently and where you want to be. So I would say, yeah, if there's anything I have seen in people who might need some work, it would be that they have not done their homework. They've not established their team. They've not established those relationships. And therefore, it's going to be a harder road for them because there isn't that, that spirit of wanting to, everyone to help you get to your goals. So, and SBA is a wonderful resource. They've got SCORE, which is retired professionals in every industry, whether it be healthcare or, restaurants. They've got someone there that can help you because they have been in that industry for many years, and they'll help you put together that business plan that was talked about, or your projections, or just help you find a bank. And SBA also has a list of lenders that specifically are looking for the type of loans that you need. So in other words, you might not be a good fit for some of the bigger banks, but you would be a perfect fit for some of the community banks. And SBA's got that list, which I just updated our list, so I know they do it a couple times a year with the loan programs that we offer. Just because one bank might say, you're not a good fit for us right now, doesn't mean you're not eligible for financing. It just means you need to find that that lender that is looking for exactly what you're looking for. So that marriage, that matchmaking, SBA can be a part of that. So I would suggest, use these resources. They're all free of charge, and it just makes sense for people, especially if you're just starting out.
Thank you so much, Jennifer. I loved that response. Thank you so much. The next question is for Kent. What are the key questions you should be asking before committing to a particular loan and provider?
Well, this is a timely question for me because I've had a number of cases lately where we're issuing a letter of intent or a proposal to an applicant or to a potential borrower. And it's hard to know exactly what's happening behind the scenes, but I sense, just overall eagerness, we've got this, let's go, and let's move forward. But what seems to happen a lot is they overlook a lot of the detail that's in that proposal. And it's hard, it just happens. I don't have a good explanation for it, but it's always kind of one of those aha moments when the loan application is already in credit now and the underwriters are working on it, and the borrower is saying, oh, wait a minute, where did that? I don't remember that as being part of the loan. Well, it was in the proposal. It was bold printed right here on page 2. This sort of thing can really kind of hurt your ability to move forward if you don't understand exactly what the parameters of your loan are supposed to be. So I would just, kind of helpful reminder, it is when you get that proposal, you're not quite there yet. You're rounding third basically, and you're coming to home, but it still has to go through the final due diligence in credit in order to get approved. They may come back with additional questions, or it could be declined. But the things you should be looking for in that proposal, or it'll always name, if there's a particular individual or maybe more than one individual that has to be a guarantor. Make sure you agree with that and that those people are supposed to be the guarantor, because you don't want to have that surprise, somewhere down the road. It kind of becomes important. There are other requirements, like if you were 100% owner of your business, more recently in the last couple years or so, maybe a little longer than that, the SBA has started to request that you have life insurance to cover yourself. If you're the only person who runs the business, you have all the intellectual property in your head. If lightning hits you, or the bus when you step off the curb or whatever, they want to know that from a collateral perspective, we have life insurance in place. But look for that, because it may or may not be in the proposal. And if it is, and it's something maybe that you don't have, or maybe you don't have it in an amount equal to the loan amount, it's something you're going to have to go, and take care of before the loan can advance through credit. Earlier, I mentioned, possibly a lien on a home, another residence or commercial building. I'm always amazed at how many times that's missed. And it's almost a regular occurring thing with SBA loans if they can't find enough business assets. So don't be surprised by it. Look for it, because it may be in there. Technically, if you live in Texas or Florida, it won't be in there because they have a different set of rules, but everywhere else, you might look to see that included in the proposal. There are other little key points like prepayment penalties. Make sure you understand how long am I subject to a prepayment penalty if I want to refinance or get out of this loan sooner? What are my limitations to paying this down more quickly? Do you allow for that sort of thing? These kind of things can be spelled out, in a letter of intent or proposal. And so it's really important you just follow all of that detail before you agree to it, sign off on it, and then send in whatever, good faith deposit they require from you. So I think that's it. That's all I have on that particular topic.
Thank you so much, Kent. Now I'm going to turn it over to Melba. Melba, what are some alternative capital options?
Alternative capital. So we've had a couple of situations, obviously, because we can't always fund everybody, where we weren't able to get them funding. Generally, if we are not able to get them funding, the next logical step would be to see if they fit the criteria for one of our partner CDFIs. Sometimes, if that's not the case, or it's not gonna work out for whatever reason, it could be credit. Generally, it's credit though. They won't qualify. And figure if they're not going to qualify with us, they're probably not going to qualify with the majority of the other lenders out there. So there's a couple of different options. There are always the possibility that there's going to be grants. So on our website, if there's any grants that are out there, we encourage clients that have applied with us and are not able to get funded to go into our website and to look to see if any of these grants or other type of alternative financing is available. If they don't qualify for another reason that's not specifically credit, meaning, there's certain industries that we're not able to fund. Generally the same industries that most of the banks are unable to fund. In this case, I find that one of the best resources out there is an organization, well, it's actually more of a website. It's venturize.org. We generally will send them the website in an email. You click on there, and then it basically brings out all these lenders that are available that might be able to fund a loan that we are unable to fund, be it because of the industry or something else that's not credit related. Aside from that, and I know this is just kind of out there, it's not maybe what maybe some of the other CDFIs would recommend, but we also let people know, if you're really invested in your idea of bringing your business to fruition, you want to see it, we recommend try crowdfunding, try to get funds together, that way. If you don't think you're going to be able to get it for for the reasons of credit. Case in point, we had a client that really wanted to start this business, and he happened to have a classic car that he loved. He loved his classic car, but he wasn't driving it. He wasn't doing anything with it. And my supervisor, Rosalinda Delgado, said, you should try getting, raising funds from family and friends. And he didn't know how to do that. So it turns out that he got the idea to raffle this car off. I think he needed $30,000. So he raffled his classic car with tickets. The tickets were $100. Long story short, he ended up raising $50,000 from this raffle and was able to get his business going. And his idea was he wanted to see first if he could get the car back from the person that had won the raffle. That person didn't want to give the car back, didn't want to sell it. So he ended up getting, because he had this additional money, he invested, got the business going. The business was going good. And this is, mind you, this is not like right after. This is probably a year later after he got the business up and running. He ended up getting another car and started to rebuild it from scratch to get, a classic car together. But that's the kind of ingenuity that I was floored when I heard that, because he didn't want to give up the car. But those are the tactics that somebody says, you know what, I'm going to do this. I am going to get this business going because I have faith in it. I know it's going to succeed. He didn't qualify for whatever reason, but he thought outside the box. And sometimes when you're starting these new businesses, you might not have access to funding and capital like you would normally. And so you need to be able to, roll with the punches and just do whatever it's going to take to get it done. So I'm not saying, hey, go and raffle off whatever you have in your garage. I'm just bringing up that story because I thought it was phenomenal that he would do that, and the amount of money that he raised. It was a small town near Coachella. And I'm just thinking, those are the things that you have to think about, how you're going to get that money. So it might not be from raffling, but it could be by maybe getting onto, venturize.org. It could be crowdfunding, something that's not the norm as far as lending. So those are the alternative ways that I've seen that people can get money together.
Thank you so much, Melba. And thank you for mentioning venturize.org. I'm going to do a little plug on our tool. It is available on our website, and you'll find lenders like Accessity, Comerica, and Lendistry on there. You can also tap into technical assistance and those who do like a cohort the way CIELO does. So CIELO is also actually on our Venturize as well, and organizations like it. So what I'm going to do is I'm going to open it up to questions, and then we'll wrap up with all three of the panelists, letting you know what advice that they would give to a small business owner before applying for a loan or any kind of capital. And so we'll wrap it up with that. But before we do that, if you'd like to ask a question, please raise your hand, and then I'll call in the order that I see the hands raised. Yes, Alex.
Yes, thank you, everybody. A lot of good information. I think everybody will agree with that. I had a question for Melba. So Melba, we do have a lot of clients that are startups, right, who maybe haven't done their first tax return yet. So in terms of being ready in documents, I know that Ken had talked about documents. What would you say are the main documents or the best way for the startups to be ready to be able to apply for a loan, say with Accessity?
Thank you, Alex. Okay, so with Accessity, it's almost the same as what Kent was mentioning. We only require the last 2 years of tax returns. Ironically, we have a lot of people that haven't quite, haven't yet filed their 2021. So we're making an exception which normally we would not make, but because of the pandemic and the way things are, we're making an exception to where if you don't have your 2021 tax returns, we would ask for 2019 and 2020 and a profit and loss for 2021, and then a year-to-date profit and loss for 2022. Aside from that, we would request a balance sheet that shows basically the assets, if any, for the business, a copy of the ID. We also need to make sure that the business entity is operating legally and registered in California. We do have quite a few business owners that have their business here in California, but don't want to register their business for whatever reason. They think the fees are too high, the taxes, so on and so forth. But specific to Accessity, we are a nonprofit. However, the reason why we are able to extend these loans is because the state of California gives our clients a guarantee. That guarantee basically states that if they were to default on the loan, the state of California comes in and reimburses us 80% of whatever the money was lent out. Now, our default rate is less than 1%, so we're not in the business of writing bad loans. However, because of that guarantee, one of the, obviously the stipulations with California is they want to make sure that if you're doing business here, you're paying taxes here. So that would be one of the things to make sure that the business is registered here. Another thing would be we want to get a snapshot of current financials, last 3 months of the bank accounts for all the personal and the business. We want to see capacity. We want to see cash flow. We want to see how much money is coming in. What can we count with? If you make $10,000 a month from all sources, and at the end of each month, you only have $200 as your ending balance, and you're applying for a $100,000 loan, you're not showing an underwriter that you're making enough to cover our payment. So we would not be able to lend to you. So we want to see a snapshot of that. We want to see a business plan if it's a startup. And generally the underwriters like to call the business owner, and speak to them and see, how well in tune they are to their business, to the market that they're trying to attract, to cater to, just to make sure that they understand what they're getting into. Aside from that, they might request a couple of more documents, but that's generally the list of required documentation that we would need if you were to try to apply for a loan with Accessity.
Thank you so much, Melba. Does anybody else in the audience have a question for one of our panelists? Alrighty. If there aren't any other questions, then I'd like to throw it over to the three of you to wrap it up with what advice would you give a small business owner before applying for a loan or any kind of capital? We can start with you, Kent.
Okie doke. We've kind of touched on this a little bit, but your preparation ahead of time is so important, and how organized you are and how organized things appear really do make a bit of a difference. I think it right off the bat sets kind of a positive tone for who this applicant is. And it sounds nitpicky maybe, but even down to the PDF files that you're sending to your lender. So many times we'll get a single PDF for each page of a tax return. I mean, there could be 40 pages in a tax return, and that's only 1 year. You got to get all the other years, if they exist. And for $100, you can get a scanner at Walmart that, boom, you can just put it all in one PDF and be done with it. And I know ultimately the same information gets to the lender, but it makes such a better impression when they can open a file and the file's named correctly. It says 2020, and when they open it up, it actually is the 2020 return or whatever the document is, and it's complete. All of it's in that document. So I would just, not to be sounding ticky-tack, but I think it's an important thing for you to consider, because it sets the stage going forward for everything that's going to happen. And not only that, If you're an underwriter and you have a stack of files to get through that day, a bunch of people wanting loans, who do you think you're going to spend your time on? The one that has 19 PDFs for one tax return, or one PDF? I mean, they're going to go right to the one they can dig through quickly, and it might delay, you getting any feedback or ultimately you getting approved. So I would put some effort into that. I think it's definitely worthwhile. The other thing I'll bring up is that you need to be a little realistic with your loan request. Your revenues might be, let's say 50,000 or 100,000, 300,000, whatever. But if you had 100,000 in revenue, you probably don't want to come in and say, I want 500,000 for payroll and equipment and advertising and marketing. And that's probably going to raise a red flag. It's more likely that folks in underwriting would want to see a loan request that's closer to the revenue, maybe not a lot more than the revenue, even less than the revenue would be ideal. The only exception I would throw out is for things like commercial real estate, where they really, because it's an asset that lenders like, they'll tend to go further with real estate. And for that matter, in California, where can you buy anything that's going to be 200,000 or 100,000 bucks? It's going to be quite a bit more. So they'll push the envelope on commercial real estate, but business assets, any type of term loan, you want to keep the request closer to the revenue size of the business. And other than that, just I would say be responsive, be ready. Don't ghost the creditor. I've had situations where they initially sound all enthused, but then they don't take calls. They're not available for a week, 2, 3 weeks on end. And you wonder what happened to this person. They really seem to want a loan. If you're ready to go, be ready to go. And when the lender calls, be ready, because it obviously just makes things go more quickly, and it keeps you at the top of their queue, because they have other loan requests to get through, and they're going to go after the ones that they can reach first. So that's it.
Thank you so much, Kathy. Ken, I'm so sorry. Thank you so much, Ken. Jennifer, same question for you. What advice would you give for a small business owner?
If they're seeking an SBA loan, I would start at SBA. Honestly, I would. Like I say, they have that list of lenders, contact information, exactly the type of loan you're looking for. You'll have a very good current list. Start there. And then my second advice, which is, have your team ready, your CPA, your financial advisor, your attorney. All of these people are going to be very vital to you being successful. And it's not going to waste a lot of time. If you talk to your CPA and you're doing 500,000 in sales, he's going to advise you what would be an appropriate loan amount based on what you can afford, based on your cash flow. So, get that team together, contact SBA, and approach the right lender. And then establish those relationships with your lender. It's very, very important. The people that Kent and we work with every day are the people who are responsive to us and are going to be what we feel a good fit for our banks. So, it's really the personal touch, it's so important, like everything in life, so important to have that relationship.
Absolutely. Thank you so much, Jennifer. I appreciate that response. Melba?
Hey, okay. So I think Kent touched up on a point that I feel like I have to repeat, which is, when you're submitting documentation, it really doesn't look good when you're piecemealing stuff in, or you're taking pictures of a document and then sending in a bunch of JPEGs. It just doesn't, it's specifically for companies that are already, they're already open and conducting business. It doesn't look, it's not a good look for the company, because it shows that, your finances, you're not really taking care of your paperwork, your documentation. Chances are, you're probably really not taking good care of the business itself. I highly recommend that, business owner that's already in business, or even one that's going to get into business, maybe spend a few extra dollars to get some kind of accounting system, QuickBooks, something. I have clients that have come in and they have this, and when I ask them, I need a profit and loss, I need a balance sheet, they're like, oh, I have QuickBooks, and boom, they just create a report and they send it in. And just, the fact that they have these documents, they have this system, it looks really clean to an underwriter. Underwriter looks at that and says, you know what, this person has taken the extra step to really take care of their finances. They're really on top of what's going on. Which is not to say that if you do piecemeal your stuff in, that we're not gonna, that you might not get an approval. You might get an approval, but it might not be as quickly as maybe someone that seems to be a little bit more organized with their business. The other thing I would highly recommend is, if you're gonna go and ask for funding, any kind of funding, take a look at your finances. Look at the last few months of your bank statements. What is the ending balance? Do you even have a balance in there? How many non-sufficient fund charges do you have each month? Put yourself into the position of someone else, an underwriter, looking at your finances. If you were to look at as an underwriter, you're saying, okay, should I lend this person some money? If you were to look at your bank statements and you see all these non-sufficient funds and overdrafts and all kinds of stuff, at the end of the month, you're at a negative balance. Would you lend money to that person? Probably not. So, you want to always present yourself, especially with a company like Accessity, where we're basing whether or not to give you credit on your personal finances. Look at it, take a look at it and see, what can I improve? Do these balances look healthy? Does it look like I'm in control of my finances? And have a business plan. Definitely have a business plan that shows where you're at and where you want to be. That shows, that you took some time to think about it, that you're just not, walking in blindly and just hoping, crossing your fingers that everything's going to turn out okay at the end. It shows that you spent the time to really research what you want to do and figure out what's the best way to get there. I think those are the main things I would suggest that someone that's going to ask for funding, whether it be a startup or an existing business, that they really take a close look at those, because someone else is going to be looking at them, and you always have the time to fix it, but what's seen by the underwriter cannot be unseen. Just remember that. Once they see it, it can't be unseen. And so maybe you had a good chance of getting a loan and you just came in unorganized and you ended up getting declined, which happens. And it's nothing personal, like Ken says, it's nothing personal, but I mean, we have to adhere to our guidelines. So that's what those are my recommendations.
Thank you so much, Melba. And thank you, Kent and Jennifer. We really appreciate your time, your insight. You guys were wonderful. This was a really great panel. You gave us so much information, so much so that nobody had any questions because you touched on everything. Key things that we learned is get your documents in order. Your personal credit matters and it tells your story. And lastly, build relationships with your lenders in your bank. Relationships are key to success. Remember to take care of your finances. And so with that, Alex will send you all a document after this that will have the direct contact for each organization and more resources to help you build and scale your small business. Again, thank you so much for your time, Jennifer, Melba, and Kent. And thank you, Alex, for having us on today.
Definitely. Thank you so much, everybody.
Thank you.
Have a great day.